For many years, financial institutions have promoted the notion that keeping money in a bank account will lead to growth. The general belief has been that saving diligently in traditional banking products is the best way to build wealth over time. However, the reality is far more complex. While banks do pay interest on savings, the returns generated by most accounts fail to keep up with inflation, leaving savers with a diminished purchasing power over time. Inflation gradually erodes the real value of money, meaning that the cash sitting in a savings account today may not buy the same amount of goods and services in the future. This is why exploring alternative investment strategies is critical for individuals seeking financial security and growth. One of the most historically reliable ways to protect wealth is through precious metals, specifically gold and silver. These metals are considered safe haven assets, meaning they tend to maintain their value even during economic downturns. Gold, in particular, has played a crucial role in financial markets for centuries. It has been used as currency, a store of value, and a hedge against inflation. In times of uncertainty, such as during recessions, wars, or financial crises, gold prices tend to increase as investors seek stability. Recent economic conditions, including trade wars and fluctuating stock markets, have driven gold to record-high prices. This reinforces its role as a protective asset. Silver also holds significant investment potential, though it operates somewhat differently from gold. Silver prices are more volatile, influenced by industrial demand as well as investor sentiment. Because silver is used in manufacturing and technology, its price can fluctuate depending on industry trends. Investors looking to diversify their portfolios often allocate funds toward precious metals due to their scarcity and long-term resilience. However, purchasing physical gold and silver comes with logistical challenges, such as storage and security. To bypass these concerns, investors can choose exchange-traded funds, ETFs, that track gold and silver prices, allowing them to benefit from price movements without owning the physical metal. Beyond precious metals, government-issued treasury securities provide another avenue for wealth preservation. Governments continuously borrow money to finance their budgets, issuing treasury bills, notes, and bonds in exchange for funding. When individuals invest in these securities, they are effectively lending money to the government in return for interest payments. In the United States, treasury securities can be purchased directly through Treasury Direct or acquired from brokers in secondary markets. Some states and municipalities also offer tax-free bonds, meaning investors receive income without being subject to taxation. This can be particularly valuable for individuals seeking steady returns without the tax burden associated with other investments. Treasury securities tend to be low-risk investments, which makes them suitable for conservative portfolios. They offer predictable returns and serve as a reliable source of passive income. While the returns may not be as high as some other investment options, they frequently exceed traditional bank interest rates. Additionally, during periods of economic uncertainty, government bonds can serve as a financial safety net. Investing in treasury bills, notes, and bonds is a practical strategy for individuals who want to protect their savings from inflation while maintaining liquidity. Another powerful way to build wealth over time is through real estate investing. Real estate remains one of the most effective inflation-beating assets because it is tied to physical land and property, which continues to appreciate over time. Residential and commercial real estate have historically been in high demand, driven by population growth and expanding urban centers. Since the 1970s, U.S. residential real estate values have consistently outperformed inflation, making real estate a strong, long-term investment. Many investors hesitate to enter the real estate market due to high upfront costs and financing requirements. However, there are alternative ways to invest in real estate without directly purchasing property. One option is real estate investment trusts, REITs, which function similarly to mutual funds. REITs allow individuals to invest in real estate markets through professionally managed funds. These funds often focus on different sectors, such as residential housing, office spaces, and commercial developments. Healthcare REITs, for instance, are growing in popularity due to the increasing demand for senior housing and medical facilities. One significant advantage of REITs is that they are legally required to distribute 90% of their profits to investors, making them an attractive choice for those seeking passive income. For individuals who prefer direct real estate ownership, strategies such as purchasing rental properties or flipping houses can be lucrative. Some investors use no-money-down financing methods to enter the market without large upfront costs. Books, podcasts, and online resources provide insights into these techniques, helping first-time investors navigate the industry successfully. Regardless of the approach, real estate provides numerous opportunities for generating income and long-term wealth. A newer yet increasingly relevant asset class is cryptocurrency, which has grown in prominence as digital economies expand. Cryptocurrencies such as Bitcoin and Ethereum operate outside traditional financial systems and aim to serve as stores of value, similar to gold. Bitcoin, in particular, has experienced remarkable growth, attracting global attention for its dramatic price increases. However, the market is highly volatile, with sudden price swings causing significant losses for some investors. Despite the risks, cryptocurrency is being integrated into mainstream financial markets, and some institutional investors are beginning to view Bitcoin as digital gold. The decentralization of cryptocurrency provides an alternative to traditional banking systems, especially as governments continue to print money and increase national debt. While cryptocurrencies should not make up the majority of an investment portfolio, allocating a small percentage toward digital assets can help balance risk while offering exposure to potential upside. Relying solely on banks for wealth preservation can limit financial growth, particularly in an inflationary economic environment. Banks provide convenience but often fail to deliver meaningful returns. To build financial security, strategic investments in diverse asset classes are necessary. Precious metals offer stability during economic uncertainty. Treasury securities provide steady income. Real estate continues to appreciate, and cryptocurrency introduces innovation and diversification. Understanding these investment options allows individuals to make informed financial decisions and implement tailored strategies that align with their risk tolerance and long-term goals. Whether through tangible assets, government-backed securities, property investments, or emerging digital assets, wealth accumulation depends on diversification, informed decision-making, and proactive financial planning. By exploring these opportunities and adjusting investment strategies accordingly, individuals can protect their savings while fostering sustainable financial growth for the future. Check out our other videos to learn more about how to become financially free.